please. I see a little green right there. The Dow's moved up to 31 points, and the Nasdaq's only down 45. David Stryzewski joins me now. David, everyone seems to be turning bearish. Are you?
Good morning, Stuart. As we look at the world today, I think that as we look at the 5 things that move markets, I'm not really excited about any of them. What this November rally has been based on is a Fed pivot that I don't know is ultimately going to come in January. The Fed is ultimately going to determine where we go and what we do. I think that we've priced in this pivot and pause idea, but what if we don't have big moves in 2023 on the downside? I think the Fed's going to stay higher for longer, and I don't believe that that's priced in. So I think that we're going to see a lot of disruption and volatility here as we move into the first part of 2023, as this market rally is just kind of skating on thin ice right now.
Okay, I see some people moving out of stocks and into bonds. Not necessarily me, but I know people who are doing this. Have you seen this? And is this the kind of thing we can expect if we get more selling in stocks?
Well, sure. There's 2 different types of investors today. Those that want to avoid risk and those that are trying to beat inflation. Those that are trying to beat risk or fight risk are going to add more allocations to bonds, as an example. Now, I don't personally think that this is a great idea today, given the interest rate challenges that bonds have, as well as the fact that we're going into a corporate credit market that is going to have much higher interest rates than the economy that we've been in. So I don't think that we've seen these cycles, change out yet. And ultimately, these protected assets that are in bonds, may fall short of what we were hoping to be able to accomplish. Right as the stocks are coming down and having their challenges as well.
All right, David, have a go at this one. Jamie Dimon, top banker, compares crypto to pet rocks. Do you have any comment on that?
Sure. So Jamie Dimon is kind of clever in the way that he shares this, and a lot of the cryptocurrencies out there today maybe like pet rocks, that there's not really a value, but just something that they're selling. I think, though, that it's interesting to note Bank of America has kind of made and established the way that I think banks will work with cryptocurrencies. They own 83 patents on crypto, more than anyone in the world, and they were actually transacting all internal transactions on the Ripple network until January last year, when Ripple was shut down by the SEC. So SEC needs to regulate. We need regulation in this space. The stuff with FTX and whatnot is unbelievable. I can't believe that people are losing money like this. But I look at crypto technology as like the tech stocks of the 90s, when people said, hey, don't put money on the internet. You'll never buy anything through the internet. Well, we just saw, Black Friday and Cyber Monday be the biggest, runs that we've ever seen in our history. It just takes time. Okay. So I think that it's a digital dollar that was made for a digital world, as opposed to a paper dollar that turned digital, that doesn't allow, wire transfers after 5 p.m. and weird things like that. So I think that the crypto space could solve some challenges, but we're a ways away from getting that.
I just want to, I made a mistake there. Jamie Dimon called tokens pet rocks, not the whole crypto industry. That's my fault. David, thank you very much, sir. We'll see you again real soon. Now, some stocks are moving to